Rover Metals, trading with the ticker ROVR, is confident that its Cabin Lake gold project might hold millions of ounces of gold. The company already made a great start proving that assumption, repeatedly reporting high-grade gold from drilling at the project. We're talking to CEO Judson Culter today to find out more. Welcome, Judson.
Hey, thanks for having me, Bjorn.
Judson, as I said a couple of minutes ago, it's been a long time since we last spoke. So please briefly remind our audience what Rover Metals is all about.
Yeah, we're a high-grade gold junior mining company. Again, just focusing on, when I say high grade, we're talking above 5 grams per ton, in terms of significant mass. And so we're working in Northern Canada, which is a relatively underexplored jurisdiction in the country, and really a jurisdiction that's got the potential for large-scale discovery. So, again, junior mining at the exploration stage, pre-production, that's our company.
Okay. Well, let's talk about the project you're looking at, the Cabin Gold project, in detail then. Please give us an overview of what you have there. What's the location, size, neighborhood? What kind of historical data and information do you have?
Yeah, I'm just going to talk in terms of a 120 square kilometer radius. That's sort of our jurisdiction. We're in the southern part, the very southern part of the Northwest Territories in Canada. Within 120 square kilometers of our project, there's been over 16 million ounces of gold that has been mined historically. And that's at an average grade at around 12, 14 grams per ton. So that's just what's been mined historically, like going back to the 30s, 40s, 50s. Today, this jurisdiction we're in, there's currently 7.5 million ounces of gold that are sitting in our competitors. So other junior miners, there's 4 of them, all around us, so again, in that 120 square kilometer radius. And then there's us, which we have our own resource that hasn't been published, sitting at around 150,000 ounces. When we started, there was, about 85,000 ounces. So in the last 2 years, we've obviously increased the ounces. Our average grade right now is sitting around 5 to 6 grams per ton. And we have one zone, an area of that's 50,000 ounces of roughly 8 grams per ton. And that's the focus of where we're currently drilling right now at the Cabin Gold project, is this one single high grade zone. We're following it at depth, and that drilling just started 2 weeks ago. So I think, that's pretty exciting about our project, the opportunity for the jurisdiction, and just the endowment of where we're working, a very mining friendly jurisdiction.
Okay, well, certainly high grade is always good. It makes your project a bit more resistant, let's say, to fluctuations in the gold price if you have higher grades. And although, of course, at $1,900, gold is pretty strong anyways at the moment. Let's take a step back there. I get a bit more details. You talked about one zone already. If I get the sequence of things correctly, that's you did the Arrow zone in 2020, and then the Beaver and Andrew zone in 2021. And each time you hit high grade gold at 5 or above 5 grams of gold per ton often. Can you just summarize the highlights and what did you learn from that?
Yeah, no, and I think the highlights sort of get to geology, so I won't get too technical, but we have at surface, we have an iron formation, abandoned iron formation that is about 15 kilometers in surface length. And when I say at surface, we're talking, within 12 meters of surface. It's right there. And sometimes it's, you can see it visibly at surface. And so along that 15 kilometers, we've just tried to identify, like you said, the high grade, where are the highest grade areas for us to focus on. And, going back to 2020 and 2021, that's really what we did. We've now defined 3 zones at surface, significant surface strike length, like each zone is over 100 meters in surface strike length. And in one of the zones case, which is Andrew, that's 800 meters in surface strike length. So now we've got enough really to focus on for, getting to the next stage of our company, which is a resource disclosure. We've got these 3 zones that are just need to be drilled below 50 meters. And so it's actually really simple moving forward. We just need to raise money and drill because the gold is there. We've defined enough surface exploration today to be able to get us to that 250, 500,000 ounces by just drilling these locations at depth. I mean, there's still potential for, the other, like we've got some big anomalies. We've done a bunch of ground IP work in 2021. So we think there's actually, probably even 2 to 3 more zones on the project as well, at surface at least. And so, but yeah, our focus right now is, as you said, over the last 2 years, we've got really delineation of 3 zones being Arrow, Andrew, and Beaver. And so this program, the 2 highest grade zones are the Beaver zone and the Arrow zone. So we are actually drilling both of those zones right now. So a continuation of drilling where we left off in 2021 at Beaver. So we're drilling that 200 meters to the south. And, with the Arrow zone, which is, the very high grade area, that's where I talked about for the 8 grams per ton. We're drilling that. We actually, the deposit continues underneath a very small marshy lake. So we've got 44 inches of ice. It's still cold up in northern Canada, like minus 15 degrees Celsius. So the ice is, we have the drill rig out over the ice, the drilling cross dip, following that ore shoot. And so, yeah, we're super exciting, right? I mean, as a junior mining company, you always want to be drilling, and that's what we're doing. We're very fortunate with, being able to complete a successful financing yeah, so upwards and onwards, I guess.
I guess, yes. And then also the company likes to do the drilling to see what it's got. Also the investors like to see the company drilling because, as they say, the truth is in the drill bit. So we'll see if you have more of that. Let's talk about the financing that you mentioned. It was supposed to bring in, I think, up to $2 million into your treasury. So would that get you through this year with all the drilling you've planned, or would you need more funds?
So that's really for the drill program that we're on. I mean, the minimum we wanted to do, was, about 1.2 million, which we've now done, right? So we announced that closing. So 1.2 million of the 2 million has been closed. And that was the minimum drill program. Of course, we'd like to, increase, and, we just need to top up for things like marketing and G&A. And there will be a financing again later this year, just because what this project really needs is another 3 to 4 million in drilling. Like, as I said, there's 3 zones that are open to depth, like 800 meters in surface strike length, right? So there's just tons of targets here. So there will be, yeah, for sure, there'll be another financing later this year. I mean, and that's a forward-looking statement, of course, and subject to really, I think, a healthier market. We don't want to finance. I think if you look at across the board, 90% of junior mining companies are devalued right now, just in the market. So, any larger scale financing would certainly be subject to a better market in terms of share prices and so on.
Well, let's hope we get the better market, and also it would of course help if the drill results continue to crank out high grade gold in that regard. So let's keep our fingers crossed for that. So just in 1 minute summary, what is the value proposition for Rover Metals? Why should investors take a closer look at the company now, in your opinion?
Absolutely. I mean, I think in terms of, let's look at our share price over the last 2 years. I mean, we've been between 5 to 12 cents, right? So we're still what's considered to be a penny stock, right? So this this is, if you look at what's been defined in the mining sector as the Lassonde mining curve in terms of an investment life cycle of investing into a junior miner. You know, there's two valleys and two peaks really as a mining investor, and that's investing in a exploration junior mining company that is on the verge of a major resource disclosure. And, you know, you move up that value curve, strategic investors will get involved once you start showing critical ounces. And then all of a sudden, when a strategic investor comes in, all their buying support in the market, you know, they don't want to see you finance below 20, 30 cents, right? And then once you're at 20, 30 cents, then all of a sudden the US market is right there, very, very interested, and it just kind of takes off from there. So, you know, Rover Metals really is sitting in that the bottom of that curve, taking up, you know, as we're climbing up the Lassonde curve towards our first resource disclosure. That's a really, I mean, arguably the best place, the best timing to invest in a mining company. I mean, if you follow it later down the cycle, you know, there's a similar valley and peak for production. But you know, those producers are, you know, you're generally, your entry point's like $1 or $2 a share. You know, today you can get in at, you know, 5 cents. We've actually, you know, raised, as a company, we've raised the majority of our money historically at between 10 and 12 cents. So I think there's a real value. We've had several independent mining analysts that I've talked to or interviewed with that have looked at us, including, you know, we have a research coverage by Fundamental Research. And based on the grades we have and the results that are, you know, in the public domain, you know, we should be a minimum $20 million market cap. And that's just, you know, we're flying under the radar. We haven't disclosed our resource. You know, historically, we've spent 18% of our funds raised on marketing, whereas I think a lot of our competitors spend 25 to 40%. So we put a lot more money in the ground. Obviously, I'm very confident that we're moving up the value curve and on our way to hopefully a strategic investor that's really going to be the game changer for, you know, investors that are doing their due diligence, management team. The project itself just speaks for itself. So I think we've got the longevity, you know, to really get there by the end of 2022.
Okay. Well, thank you very much. Certainly, looks good. Looks like we talked at the right time too. Then
Yeah.
we'll be sure to talk again once this round of drilling is done, and we can talk about the results. Thank you very much for taking the time today.
All right. Thank you, Vaughn.